Cheers. Ding ding. All right. So let's wrap it up and take a look at what everything did today and kind of cover what we can expect. So BBBY, nice run up, 23% move today. Little higher at its peak. We're gonna need to wait for more options interest to build in these levels. So we had a lot at 15. That can carry us up to like the $17 range, but there's still a gap at 18, 19 before we hit that big pile of OI at 20, right? And so it could take a couple days. What happened there? Hold on. Sorry. It could take a couple days before we see, a sufficient amount of interest to build up, and likely they will try to manipulate the price kind of back down into that range around like sub 15 where they can control the price a little bit better and keep some of that $15 OI out of the money. Remember, if you're carrying weekly contracts on Bobby, try to be in and out of them quickly when they're profitable, because they may not stay profitable for long. This will be generating some exposure for the T+2 period. Obviously, the move was quite large, up $3 at close, and that will be realized Wednesday for the next kind of leg up on the market maker exposure. Right now, BBBY, as of this morning, and this could change, has a 41% chance of peaking over $20.60 this week. We'll see how that plays out. Obviously, that number can move up as more call buying comes in. Revlon today, shooting up really hard on the back of, let's see, it was about, 1.76 million FTDs due today from 815 at a failed to volume ratio of 49%. Traded 23.9 million volume. The lowest fail to volume ratio we've seen on Revlon is about 20%, the highest being around 40 or 76. So you can expect, a significant chunk of the volume traded on Revlon today to fail and generate more failures into the future. This is the first day of several days of accumulating FTDs that we're going to be seeing going into next week. GME actually following our expectations most out of all of these basket stocks, with a hard drop down today to 38. Almost retested it in the latter half of the day, with a small bounce up into CNS, closing out the day down 2.6%. I expect this could continue falling into the rest of the week as options interest remains kind of low. This may get hit the hardest by SLD out of these three stocks, because it has the least amount of obligations due this week and thus the least amount of exposure. SPY moved up today as expected, with the carryover of exposure from last week's big run. Testing 429.41. There is still some room to the upside, which we may realize in after hours or into the early morning tomorrow. After that, I expect SLD will likely set in. That and FOMC minutes from a more bearish period could reinstill the fear that should be there in the first place, that the Fed will move forward with hawkish rate increases, aiming for that restrictive rate above 2.5%. We will see how that plays out, obviously, into the latter half of this week, but still pretty bullish on this until after tomorrow, like midday tomorrow. And then I think we may start to see some downside as a reaction to the meeting coming up. Also, some bad housing data tomorrow might also give us a little bit more move down. I think that's about it. Thank you guys all so much for tuning in and for the support, and for everyone that made money today and everyone looking to make money or holding on to, unrealized gains. Congratulations. Seriously, good job, and well played. Thank you all so much. I'll see you tomorrow. Have a good night. Yes, I see Revlon.